Hey, what's up, stock compounders? Brad here. So, we are back with episode 4 of stocks that smart value investors are buying this week. Okay, just to remind you all, I find this information on Corner of Berkshire and Fairfax. There's a message board in there called "What Are You Buying This Week?" and people can kind of jump in and say what they've bought. And so I looked through the last week of posts and I put all of those companies here in this spreadsheet for you guys. So let's go through what showed up in the last week. There's a few that showed up that were also in last week's video. So we've got Berkshire Hathaway, Madison Square Garden Entertainment, Alibaba showed up last week, and Preferred Apartment Communities. I believe those were the only 4 that also showed up last week out of the 13 that showed up here. So let's go quickly. I do this every week, but for those of you who haven't seen this series before, let's go quickly through the filters I'm using to try to rank, how compelling these opportunities might be to dig into, okay? And there's really the score column. That's how I sort this. And the score, you can get a score in one of 3 ways, okay? Or I should say in 3 ways. The first one is insider ownership, okay? Charlie Munger says, show me the incentive and I'll show you the outcome. Now, I really want a management team that's aligned with shareholders, okay? I, as a shareholder, want the incentives of the management team to be similar to mine, right? I want the management team to be incentivized to make decisions that benefit shareholders. So I want them to be shareholders themselves. And so this shows, what is the insider ownership? The management team, the board of directors, how much stock do they own as a percentage of all of the shares outstanding? That's what this column is. And I really like to see more than 10% insider ownership, okay? So you get a point in the score column if you have insider ownership more than 10%. The second column here is gurus. How many super investors that are tracked by Dataroma own this company? And this is really bowling with bumpers, okay? If you have a choice of bowling with bumpers or bowling without bumpers, you should always bowl with bumpers, okay? And that's what we're doing here. We're only looking at companies that other great investors with a long track record of success have vetted, have put their money down on, okay? So this is how many gurus tracked by Dataroma own this company as of the fourth quarter of 2020. That's the most recent 13F filing information we can see. And then the third column is Value Investors Club. Is there a write-up in Value Investors Club? In other words, has a good investor looked at the company, written an investment thesis for it that got approved into this club, right? There's a whole panel of great investors that look at these different write-ups to see, all right, are they worthy of being accepted by the club so that others can see them? And we can see here the most recent Value Investors Club write-up that was done for each of these companies. Now, if there's a write-up within the last 2 years, that's where you get the third point, okay? So insider ownership over 10%, at least one guru owns it as of the most recent 13F filings, and is the write-up in Value Investors Club within the last 2 years. Now, one caveat here, it has to be a long thesis, okay, in Value Investors Club. It can't be a short thesis. It can't be someone who looked at the company and said, okay, I think this is going to go down, and I'm going to bet that the shares of this company are going to go down in price. You can see here there's one company where the most recent VIC write-up is a short thesis, okay? So you're not going to get a point if you've got this short write-up in Value Investors Club. So then I simply sorted these by which companies got the most points to which companies got the least points. And then the last two columns, the acquirer's multiple, okay? This is really enterprise value divided by the last year of operating earnings. And that gives me a sense for if I was going to buy the whole company, how long would it take to pay myself back through operating income from the business? In this case here with Atco, it would take 15 years, okay? Considering, no growth, just the same operating income year after year. If I was able to pay, buy the business outright today, how long would that take? And this is really a measure of how cheap the company is on a current earnings basis. It's the inverse of earnings yield, which Joel Greenblatt uses in his magic formula. So I wanted to know, how cheap are these companies? And I also want to know how much are these companies growing? Okay, there's kind of Pabrai's framework of discounted pies and growing pies. Now the growing pie is measured, at least the way I'm doing it, by the 10-year revenue growth. Okay, so we're looking at, from 2010 to 2020, how did revenues change over those 10 years from start to end? So you can see here the highest one, preferred apartment communities, 67% revenue growth. And I don't think that's 10 years. I think it's a truncated number of years, but I can't recall at the moment. But that's very impressive. You can see Alibaba in second place here at 50% revenue growth. That's over 8 years. So from 2012 to 2020, 50% revenue growth. Very impressive. So anyway, let's take a little look at what's here. So like I said, we've looked at Berkshire, we looked at Madison Square Garden Entertainment last week. Atco, this is the fourth week that I'm doing this. I haven't seen Atco show up yet. Interesting thing about Atco, now Corner of Berkshire and Fairfax, right? Everyone is familiar with Berkshire. Fairfax, a lot of you are probably less familiar with. So Fairfax is run by a guy named Prem Watsa, okay? It's sometimes called the Berkshire of Canada. Atco is the largest holding in Fairfax Financial Holdings, almost 50% of the equity portfolio. So very, very bullish Prem Watsa is on Atco, Atlas Corp, independent charter owner and manager of container ships, okay? Market cap pretty low, less than $5 billion, at around $3.5 billion US dollars. Pretty high insider ownership, 26%. I really like to see that. That is tied for the highest of any of these companies. So very impressive. Two gurus own that one, including Prem Watsa, of course. This had the most recent write-up in Value Investors Club out of all of these companies from January 2021, just about 2 months ago. So pretty impressive there. And a score of 3, right? Checks all of these boxes. Acquires multiple, very reasonable, 15. Revenue growth, 13%. Nothing to sneeze at. Doesn't get me super excited, just on that kind of top line number. Revenue growth there. Could be interesting to look at. I really don't have any expertise in this industry, container ships, so I'm probably not going to look into this one any deeper. But if any of you own it, let me know, what your kind of elevator pitch is on Atco. Next one, Amazon, needs no introduction. I think it's maybe the third largest U.S. company. Apple, I'm pretty sure, is the first, and then Microsoft and Amazon seem like they're neck and neck recently. 15% insider ownership. This is pretty much all Jeff Bezos. So take that for what it's worth. 19 guru investors in this one, the third highest of all these companies. Pretty recent write-up. A year ago, this company was written up. It's done incredibly well since then. The last year, this pandemic has just been, really kind to Amazon in terms of their financials. Acquirers multiple 70, okay? By far the highest on the list. So you don't buy Amazon because you think it's cheap, all right? You buy it because it's growing and it's a fantastic business. Now, maybe you do think it's cheap if you run the numbers, the discounted cash flow based on a pretty aggressive growth estimate, and how dominant Amazon is in a number of different sectors. Maybe it looks cheap to you, but on a kind of a conventional metric like acquirers multiple, 70 is quite high. Of course, this doesn't factor in growth, right? This assumes kind of the current year earnings. So that's definitely not the best way to look at Amazon from an earnings yield or acquirers multiple perspective. Great business. There's something that's given me pause with Amazon is Bezos stepping down to a less kind of senior role. So that alone makes me a little less bullish on Amazon. I've never owned the company. Maybe I will someday, but not super interested at today's prices, to be honest. The next one, Baba. So a lot of people compare Alibaba with Amazon. Alibaba being the Amazon of China, a lot of people say. And it's interesting to be able to compare them side by side here. So market cap, a little bit larger than a third the size of Amazon is Alibaba right now. Pretty similar insider ownership with Alibaba, 13%. That's pretty strong for a company this large. 10 gurus own it in Dataroma, which is quite strong. It's got a write-up just more than 2 years ago, so it didn't get a point for that Value Investors Club write-up. I'm hoping we see a write-up that's a little bit more current soon in Value Investors Club. I've also made videos about Alibaba in the past. It's on my wish list, and it's actually pretty close to my target buy price. So I think Alibaba's around $227 per share right now. 36, you see on an acquirer's multiple basis, it's about half the price of Amazon. So that's pretty compelling. And you can see here over the last 8 years, because we don't have 10 years of data for Alibaba, incredible growth, almost twice the growth as Amazon. So again, Chinese company. We may have to take some of their financials with a grain of salt. I believe they're under investigation right now to even see if Baba is going to remain on U.S. exchanges. Okay, we may not be able to buy Alibaba in the U.S. depending on what we find in terms of if there are any fudging of the numbers. But still be able to buy it through the Hong Kong exchange. So that's probably how I would do it. If I do pull the trigger on Alibaba, I would probably go right through the Hong Kong exchange through Interactive Brokers. Next on the list, Discovery, okay, media company that owns and operates various TV networks. Discovery is actually a company I own through my Magic Formula series. So 9 months ago, I started investing in Magic Formula stocks, a batch of 5 every 3 months. And Discovery, Disc A, right, the A shares, were in my first batch. And it's been my second best performing Magic Formula stock, more than double since I bought it 9 months ago. So pretty happy with that. In terms of the metrics here, 5% insider ownership, not where I want it to be. 4 gurus own it. There's a write-up from about 9 months ago. So a solid score of 2, acquires multiple of 15. That's a very reasonable acquires multiple to pay. Not necessarily cheap, not expensive. 11% 10-year revenue growth. Nothing to get too excited about there, but it's no schlump. Okay, so that's Discovery. And I believe Discovery was hit just recently with this whole hedge fund margin call blow up that's been happening recently. I think Discovery and Viacom may have both been affected by that. So the next one, Markel Corporation. This is run by Thomas Gaynor, very well known, well respected value investor. So it's a financial holding company, right? Much like Berkshire or Fairfax. You can see here, 16 billion market cap. I was really disappointed in the insider ownership. I expected Thomas Gaynor to have quite a bit more of a stake in this holding company. So quite disappointed there. 3 gurus own it, a write-up from about a year and a half ago. And as a holding company, these metrics don't always make sense to apply to companies like this. So that's why there's no acquires multiple or revenue growth there. Next one, Foss Agro. Okay, production and distribution of mineral fertilizers based in Russia, I believe. Their big focus in terms of fertilizer is phosphorus, which hence the name Foss Agro. Company in Russia, 7 billion market cap. Very nice insider ownership. And I don't know how common this is in Russia. Maybe it's more common than it is in the US. I haven't looked at many Russian companies. But tied for first in terms of insider ownership. We're not going to get Guru or Value Investors Club typically for companies that are outside of the US, such as this one in Russia. So nothing there. So we have a 1 on the score from the high insider ownership. Acquires multiple of 12. Very nice. 12 is quite respectable. And then revenue growth of 13%. Again, respectable. So those are somewhat intriguing numbers there. But it takes a lot for me to be interested in looking at a company outside of the US. I really need a guru that I follow to already have gone into that. So it's kind of an easy pass for me on Foss Agro. Viacom, global media entertainment company, negligible insider ownership numbers. 6 gurus own it. Again, there's that short write-up, right? The most recent write-up from July of 2020. So if you're considering Viacom, check out this short write-up. And then I think 4 months prior to this short thesis, there's a long thesis. So, which is great. Like, if whenever we're looking at buying a company, if we can look at both a long thesis and a short thesis that are both recent, that's fantastic. It gives us a much more well-rounded story about the company, kind of from both sides. So definitely a benefit there. But I don't have any interest in Viacom with this, incredibly low insider ownership. It is cheap. You could say 11 on the acquirer's multiple. But revenue growth 7% doesn't get me excited at all. 7%. Next one, Crestwood Equity Partners Limited Partnership. Infrastructure solutions for natural gas and crude oil shale plays. This one's kind of different. It didn't even show up in Dataroma as a company. $2 billion market cap, 7% insider ownership. Not terrible, not compelling. There is a write-up from a year and a half ago. So if you're interested in, a $2 billion market cap natural gas crude oil play, this could be interesting to look at. Not cheap by this valuation metric of enterprise value over EBIT. But look at this growth, very impressive revenue growth over the last 10 years. Bank of America, another company that doesn't really need any introduction. If you look at who owns this thing, and you got Lee Lu, you've got Guy Spear, you've got Warren Buffett, you've got Charlie Munger. I mean, it's a who's who of great value investors. So Bank of America, very large, 340 billion market cap, banking and financial products and services company, very small insider ownership. Lots of gurus own this one. I think it's probably in the top 10 in Dataroma of companies owned. Right up from just over 2 years ago. Can't give it a point for that one, so only 1 point for Bank of America. Acquires multiple, doesn't really apply to banks. And then 10-year revenue growth. So revenues in 2010 were higher than revenues in 2020. So it went down, which, we've been through quite a year. Maybe that's kind of par for the course for banks. I don't know. I've never invested in a bank, and I have a real hard time wrapping my head around banks. So it's an easy pass for me. APTS, Preferred Apartment Communities. This is one we looked at, I think, the last 2 episodes here. So no need to go into that again. And the last one on the list, Flow Traders. This was kind of interesting. A liquidity provider for financial products. And the company is based in the Netherlands. Okay, traded on the Amsterdam Exchange. Less than 2 billion market cap, the second smallest on the list here, behind Preferred Apartment Communities. Pretty pitiful insider ownership. As a stock traded through Amsterdam, most of those we're not going to see in Dataroma or be able to see gurus that own it. 31% 10-year revenue growth, very strong. And this was interesting. So the reason we couldn't get an acquirer's multiple for this one is the enterprise value is actually negative. Now, what does that mean? In this case, it means the cash and cash equivalents on the balance sheet are higher than debt and equity put together. Okay, so that's a compelling situation if the business has prospects moving forward. So that's kind of interesting. In a way, you're getting paid to buy the business. I mean, that's a very simplified way to put it. But could be interesting. Could be interesting to look at if you understand this kind of business and maybe have owned things before in the Netherlands. So anyway, guys, just wanted to share these 13 companies that turned up in the last week on Corner of Berkshire and Fairfax. Hope you enjoyed this series. Let me know if you do in the comments. And if you're buying any of these recently, or if they're on your wish list, let me know what your target buy price is for them. So anyway, guys, I will see you all in the next video. Take care.